The broadcast is now starting. All attendees are in listen-only mode.
Hello everybody, I'm Dale Pinkert. Welcome back to F.A.C.E. How's everyone doing? Let me unfreeze my my screen here.
Hey, good morning, Dale. Just want to let you know I'm here in the background. Hope you're having a great day.
Okay, Blake.
Good morning from myself.
Thank you, partner.
I'm also here.
Okay, thank you, guys. So, I want to acknowledge a great call made by our community yesterday. Tosin, are you in the house? If you are, give me a Y. So, the power of the community. Hi, how are you, Tosin? Hello, Taylor, Hasselhoff, Patrick, Tamir. Thanks for following me over here. Tamir Alexandros, how are you, my friend? Tosin posted a chart on the Dow resistance yesterday. We only showed about 5 charts, but he made a great call and a great trade from here. Good for over 200 Dow points. You're the man, Tosin. That was the call of the day. Late in the session, the market sold off on some commentary from the Fed. I wanted to acknowledge it. And in this community, we're glad for others' victories. So everyone congratulate Tosin on a great Dow call, fading strength when it was up almost 180, 200 points. So congrats to you. So 1 + 1 = 11. That means the power of the community, the power of ForexAnalytix. 1 + 1 = 11. I'll even throw myself in there, throw another 1, and it makes it 111. Hello, Ziggy. How are you? Great call. Okay. I also want to talk about Canada. I know today's a book squaring day ahead of the NFP, but I talked about the potential of Canada rallying back towards the 40 or 50 range, which is exactly what happened. We're at 36 right here. So I still think in this zone, anywhere in this zone, although everything and anything can happen tomorrow, I still think that there's a shot for one more dip. And a lot of it's going to have to do with the crude. We need crude to continue to the upside. How many of you know in here that Canada trades in a pretty tight correlation with the oil, sometimes even more so than with the dollar? So keep an eye on crude. If crude does continue to the upside, make new highs, that could be the impetus as well. Hi, BW, how are you? So let's take a look at what F.A.E. is looking at coming into pre-NFP Friday. Again, lots of updates yesterday. Majority of the updates for today happened in the afternoon for me. So we had new updates for the Kiwi, some Elliott Wave updates, some updates for the silver. You could just keep scrolling down for euro, pound. What's the interest here right now? I want to hear from the community. What's your main interest and main pair? And I'll go to the F.A.E. page and give you a complimentary view of the analysis. Okay, Clayton's interested in the Aussie. Okay, we'll go with 2. We'll go with Aussie and we'll go with the cable. Everyone's trying to figure out cable because it's so choppy. But we did have an Elliott Wave update here on the Aussie 6 hours ago. Here you go. Compliments of ForexAnalytix. No change. Reg is still looking for lower levels that we could be completing 3, get a 4 to 530, and then down to 74.09 to complete this wave. Hope that helps. Does that help you, Clayton? You're very welcome. And this is when you use our platform, you're always going to get with a red star the most recent chart. Okay? So I had another request for the pound. You know, if you guys had this, you wouldn't have to wait for it. Risk a buck and change your luck. subscribe to it for 10 days, and I think you'll agree with me that it's kind of irreplaceable. So we have a little something here, basic technical on cable. Let's see what Blaker is saying and Steve is saying. Continues to tighten, so we're compressing into this triangle here. And if you're new to trading, guys, everything in red is a definition in the education section. So if you don't know what a triangle is, you get it right here on the education page. So it's a great tutorial. You're not only taught through the trades, you're taught the formation and the important contingencies of technical formations within the trade. So you could see, if you want to see what a triangle is. See, they're all here. Even the head and shoulders, cup and handle, everything. So let me just get back to our traffic light page here. So here's the pound basic technical. This is a 4-hour chart. We're in the triangle here. I would normally view this as a continuation formation because we had a pretty straight move up here. Here's a new update for the Mexican peso too. So I think Nick talked about some support levels down here in the triangle. It's really neutral, but when it comes off a directional move to the upside, although to resistance, I would say normally it's a continuation formation, but right now it's neutral. What a lot of people would do in a situation like this is buy volatility spread since they don't know which way it's going to come out of the triangle. So if you're an option player, you buy a put, you buy a call, and one of them is going to work once we come out of this compression here. Give me a Y if you understand the analysis on the pound. Okay. I have a look from Alex. Alex is a professional trader. He makes a living trading. I want to see what Alex has here on the pound. He uses Japanese style cloud and Kanken. So let's see what Alex has here in the pound. See if this works. Still trying to get the hang of this. Chart not found. Let me try it again. Because Alex's views are definitely worth paying attention to. I've watched Alex trade for quite a few years. We'll see. In fact, I play the Rolling Stone song when Alex shows his charts. Get off of his cloud. Hey, you, get off of my cloud. There you go. So Alex is showing the same triangle that F.A.E. is showing here. Pretty neutral here, Alex. Okay. Okay, take a look at your CAD chart. I know Alex is bearish CAD. Let's take a look at that too. So we have some time for some community participation. If you have any charts you want to show. And we always thank our contributors, so everyone thank Alex for sharing his work.
Dale?
Yes.
It's Steve. I have a couple of charts I would like to share as well. Actually, I tried sharing one a couple of days ago, but as it seems the application had crashed and it was never shown on the show. I was heard saying that I'm going to share a DAX chart, but then for some reason the
Okay.
GoToWebinar application crashed, so it was never shown.
Go ahead, buddy. Do I need to hand it over to you?
No, go ahead, show Alex's second chart first, and I'll take it from there.
Okay, great. Here's his chart on Canada. Definitely. Thank you, Alex. So we have a lot of professional traders in here. It's not a hobby for them. This is how they pay their bills, how they pay their mortgage, how they take care of their family. It's not a hobby. So we're fortunate to have these people in our community. That seems to be the pound again. Oh, okay. Thank you, Ziggy.
Hey, did we lose Steve? Steve, weren't you going to comment?
I'm
He
here.
made it. He's good. After I show this chart, Blake.
Oh, okay, got it, okay.
Yeah, he's going to come in and show his DAX. I'm just going to show this Canada chart from Alexandros. Okay, so here's Alex labeling. Thinks we might get another push up towards 4.5, but looking for a pullback here. Way above the cloud support. So what I like about in our community, a lot of different methods are used. I like this cloud stuff. I've seen a lot of it work, and now I toss it over to you, Steve. Thank you, Alex. Go ahead, Steve. Now we get a look.
Just make me presenter so I can show my screen.
You got it, buddy.
Okay, unfortunately I wanted to share this,
Yesterday?
Yeah, the day before yesterday actually. Oh, okay.
Yesterday's newspaper. But, anyway, you know what? If yesterday's break is real, it's just beginning anyway, Steve. Okay.
Okay, can you see my screen by the way?
Yeah.
Yes.
Got the DAX up here, and it's
okay, good.
Here, weekly. Weekly.
Yeah, here we have a weekly DAX chart. As you can see, going back in time, this is a pretty...
Can you turn your volume up just a little bit?
Okay, I think actually my volume is at maximum.
Okay. It just went softer once you started showing the chart.
Okay, that is weird. Is it better now?
Mm-hmm.
Okay,
I'll turn mine up. I'll turn my volume up.
Yeah, your volume went down a little bit, Steve. Not too sure why.
Probably so.
Yeah, Blake is loud and clear. He could be a siren right now. Okay.
So I'm going to speak a little bit louder. I don't know what kind of conflict is this. So this is a weekly...
We can hear you.
Okay, so this is a weekly DAX chart. As you can see, the structure had been quite clear. I mean, we've had an uptrend, we had a correction, we've had a huge uptrend, we had an overthrow here, and then we went exactly, actually 2 years ago, in a large corrective channel which bottomed out on February 2016. And afterwards, we started respecting an ascending channel, which we've actually penetrated to the upside during the past few days. And we have retested almost to the pip the all-time high, which was exactly 2 years back, Obviously, huge levels like this can create big reactions, but looking at the daily chart as well, and this is what I was showing the day before yesterday actually, we have an ascending wedge if you look at the daily, which we've tested several times. This was at least the third time, and every single time we've had a reaction lower. Obviously, ascending wedges are usually terminal formations and should yield at least some decent pullback, although I have to say that the reaction today with what appears to be up up to now, which is quite early in the day, a daily hammer, is a plus for the bulls. So as long as this zone that goes from, let's say, 12,050 to 12,130 is holding, there is absolutely no trigger for somebody to say, I'm going to be short. But I can tell you as a fact that a breach below this level and the ascending support of the wedge is a bearish event that should at least bring us back to this zone, which is roughly 11,450, 70, somewhere like this. So there is no trade for the time being. There is no reason to try to fade such a strong trend, but a breach of this confluence is definitely going to get me interested in short. That's why I'm monitoring the index. Okay.
I have a question for you, Steve.
As many as you like.
Have you noticed, and this is a shift in relative strength from last year, that overseas markets are outperforming the U.S., and that the U.S. markets, bourses, are showing more relative weakness?
Yes.
Emerging markets are outperforming. I believe even the DAX is outperforming in the first quarter,
Definitely.
which is completely different. So let me ask you this. Would you prefer to short the relative strength like the DAX, or is the Dow now the preferred short because it's relative weakness compared to DAX?
I'll tell you. Yeah, this is a very good question. So the basic question is...
Those are the only kind I ask, partner.
Yeah. You're absolutely right with that. Actually, that's what makes you an excellent interviewer. Okay, let me tell you. In general, it is very, very good to know when you are interested in either going short or long a specific kind of instrument, for example, stocks or whatever. Yes, it is extremely helpful to know which one underperforms or overperforms, okay, its peers, right, obviously. But that does not change the fact that when I see some clear technical trigger, I'd rather take that because, let's say, currently the DAX overperforms the US stocks. And if you ask me, I do not expect that to change anytime soon. Does that mean that if you're looking to go short with a short-term horizon, this over or underperformance in any other case would go continuously without any breaks in between for X period of time? No, it doesn't. So I'd rather follow my technical picture here and go with something that gives me a cut and clear risk reward than just in general say, okay, US stocks, and no matter which kind of index you look, is stretched to the limit. So yeah, obviously I'd rather be short that. By the way, now that you mentioned it, this is another interesting chart. This is NASDAQ actually. And as you see,
that's a great point, Steve. That's a great point. So I ask a good question, you give a great answer, because, I've gotten hung up on that relative strength weakness at times and correlations. And I believe now, after being humbled quite a few times using that you have to treat each instrument like it's a unique individual character, and it has its own characteristics, and not to make too much out of correlations. But if you trade each chart like it's an entity unto himself, you're going to be much more objective. So
yes,
great
answer. It also has to do with the nature of what kind of trading you do, for which kind of entity you do it. Do you do it for yourself? Do you do it for a fund? As Blake has done, I've done both. I've been working, for a fund. Actually, not during the past few months because ForexAnalytix has occupied, all my available time. But I've been doing it for a long period of time, and once things settle down, I'll start doing it again. And you can be trading for yourself, as you understand. The kind of trading that you might do for a fund that does X kind of trading, or for yourself or whatever, is totally different. So for example, you might decide that strategically you want to be short risk In this case,
Yeah.
you'll put all the indexes down. You'll have a mathematical approach to it, and technical analysis is just going to be a trigger for you, nothing more than that. You know what I mean?
Right.
But when you're trading for yourself, and you can take decisions for yourself fast, and also get out of a trade extremely fast. As you understand, you'll just go with the best chart that you see out there. So now that we're talking about stocks, as you see, we also have Nasdaq here. Nasdaq, after this very clean ABC correction, now we're talking in Elliott wave terms, we've had a very clean structure upwards, which is, I'm not going to go to the overall structure, and but I'm going to just look at it short term. It's a daily chart, so for my taste it's short term, but other people I know are scalpers or whatever. So we've had like 1, 2, 3, 4. We can have already topped in the short term. Why? Because we've already exceeded wave 3, and this satisfies the minimum a minimum target, although I would have liked to see higher prices. But again, as with DAX, we are still respecting, although barely, an ascending channel. There's still no trigger here, but we are getting close. I mean, another push of weakness, and the vast majority of the indexes we're watching, will be looking bad.
Yeah.
This is Dow, by the way. Also, somebody can easily say that this is just a bull flag, an inverse triangle or whatever. I mean, still there is no real trigger here as well. Are stocks overbought, and valuations are, let's say, rich, but probably rich is an underestimation? Yes, for sure they are. Do I believe that being short at the moment is a good trade? The question is, it depends. If you told me, do you want to sell here and hold for a couple of weeks? I would tell you that it's extremely risky. If you told me, do you want to be a buyer or seller here to hold for 1 year, I would definitely be a seller. So,
Okay.
always a question has to come with a time horizon as well in trading. Otherwise, it doesn't matter.
And we're so overdue for a 10% correction, and your $19,000 target is exactly there. That's 10%.
By the way, have a look at the Dow.
Yeah.
With the exception of this bridge below this channel has been respected greatly, and we almost, for a few handles, tested it again at the highs here. That was a great short having to do with risk reward, I mean, you would have risked like 50 Dow points to make, you could have easily made by testing this
500.
Yeah, exactly. I mean, it was a great short. Currently at these levels, and let me also take it briefly from. I'm not going to call it exactly a macro approach, but let's take it from a logical approach. Trump has already been defeated in his attempt to make a change in the Obamacare. Okay, Trump is more than obvious a man with a very big ego. Obviously.
No.
Yeah.
How can you say that about our president?
It was a lucky call, most probably. So I'm thinking that he will really try to bet everything on the tax reform and whatever tax breaks he offers or whatever. I mean, there are factors that can come in the future weeks or even months to come that can keep the market bid. I believe that Trump is not going to succeed to reinvigorate the strength that he wishes for the U.S. economy. We are already in a very much.
You don't think we're going to get back to a 4% GDP based upon some of his policies? And Steve, what's possible? Ryan talked about tax reform being pushed out until the fall, August. So there's plenty of time between now and then for the market to have a correction and then blow to new highs.
Absolutely.
As things begin to manifest and legislation begins to take shape and has a shot to pass.
Absolutely. Now, let's break down the questions one by one. Do I believe that the US can go back to 3-4% growth? It depends. Definitely not the 3-4% real growth, because don't forget that, yeah, you might have a 3% GDP increase and 3% inflation, for example, rate or whatever, you know what I mean? Do I believe that in general the economic approach, the economic policies, or that Trump has hinted he's going to follow, and I'm saying hinted because some of them he seems to have been clear about pre-elections, and we've already seen them being watered down or being withdrawn, you know, under the table little by little, without any clear reason why. The reasons are obvious. I mean, Trump...
Well, there's not even unity within the Republican Party right now, right? It was really the Republicans that shot down his health care plan. He wasn't expecting. So there's fractions within the Republican Party. It's fractured. It was fractured before the election. Never Trump, by a lot of conservative Republicans. People could call them the establishment Republicans. Then you have the Tea Party. So it's a tough job just uniting his own party.
You're absolutely right. And let me tell you something. I'm European, so I can perhaps speak a little bit about the US politics, although, because, you know, I have the advantage of being a foreigner, so nobody can accuse me of being biased one way or another, because, you know, I have no stakes there, I mean, directly, because let's be honest, the US is the steam engine of the whole planet, okay? So whatever happens in the US that will affect the US economy greatly will sooner or later affect everybody. But let's be honest, Trump won mainly because he had a very successful way of appealing through several populist methods to the vast majority of middle and
of angry Americans that have seen their dreams of having a better life for their children starting to dissipate over the last decade or two.
Exactly.
So a lot of voter discontent. He appealed to that, and a lot of people that were very anti-Obama finally had their day.
Absolutely, absolutely. So the question is, he was excellent in recognizing a problem and offering an obvious solution to it. Do I believe that the solutions he said he's going to offer are going to fix the problems he's supposed to be targeting? Speaking as an economist, the best thing I can say is that I very seriously doubt it. You know, if I offer you aspirin for pneumonia, most probably I'm not going to make you any better, will I? But this is a big conversation. Also goes in the category of conversations we can have with Stelios once he's back starting on Monday. Okay. You know, a macro conversation and a political conversation. But let's be simple about it. I think that the Republicans want to take a distance from Trump because they also believe that he's going to have a recession in his hands at some point, and that is not only because he's Trump and perhaps that his policies are going to fail. It's because we are already in a very mature business cycle. At some point, you know, statistically speaking, we should have a recession. I mean, within the next 4 years, the chances of having a recession within the next 4 years are extremely high.
Okay, if you know this, Carl Icahn knows this. So I believe the strategy is, if it's going to happen, get it over with early in your first couple years of your 4-year term. So
you can see it about
you're not going into it in 2020. You're coming out of it.
Exactly.
Get it over with early.
Yeah, that could have been a plan. Yes, that could have been a plan. But you never know what forces are working underneath. You know what I mean? You know how it is. I mean, the political system is so much intertwined with business interests, etc., etc., etc. It's such a complicated mechanism.
Well, he didn't make any friends. He didn't make any friends at the Fed during the campaign.
Oh, that's the only sure thing.
All right, so So, I mean, if they were, what took the market down yesterday was the talk of drawing down the balance sheet, which in effect is a tightening. It's reducing liquidity. So he doesn't have a lot of fans. He said that Janet Yellen should be ashamed of herself. As a candidate, he said it was a bubble. He said rates were too low. And be careful what you ask for.
Don't forget, though, I need to interrupt you here. As a candidate, he said that stocks are a bubble. And it was just a few days after he was elected that he started talking about the Trump effect, being proud of it. Yeah. He started saying that, that the stock market can really go higher and things like that. I mean, as you see, it's the usual say something, you know, as a candidate, say or do something completely different, you know, once you've been elected. So which of the two I believe was right? I mean, his position that the stock market one way or another is in a bubble territory, yes, it's much closer to the truth than the fact that the stock market can keep moving higher for the years to come in the pace it has been doing so. I mean, sooner or later there are a lot of clouds in the sky. Sooner or later one of them is going to start bringing rain. Just to say it as a metaphor. And we've already seen this content between, you know, real data and performance of companies and earnings with valuations, etc., etc., etc. Even if you see, you know, at the cyclical PE, Case-Shiller adjusted, we are obviously at a territory that buying and holding for a medium term is a bad investment. But anyhow, I'm not an, you know, I'm not a stock expert. Yes, I am monitoring and trading indexes, but, you know, not specific stocks. I'm, as you know, mostly a currency trader. So that was mostly, you know, seeing some charts from a technical perspective and talking about politics a little bit. But let's briefly go to the cable before, I guess we have to have a break. Now, the only thing I wanted to add to what everybody is seeing here is two things. First of all, we shouldn't forget that we've been in a range since October. Okay, this is a range. Yes, if you draw the lines, it's also a little bit a contracting range. So you can say that all of this is also a triangle on its own, as you see.
Interesting.
So we're currently in a small triangle within a bigger triangle, or in general within a range. We've had two descending channels we've respected, then popped above it, retested it, and we're currently, if we go to a short term, if I take you to a 4-hour chart, we will see what Alex showed us, what you saw Blake put up on the ForexAnalytix site. Yes, we are within a triangle.
Yes, and also Nick thought we could head up towards that 27 level as well yesterday.
Yes, which is the previous high here. Gun to my head, higher or lower in the shorter term. Gun to my head, higher. But
how about a breakout? How about a breakout fake out? We take out the triangle. Everyone thinks the pound's broken out. You know, I've seen a lot of things where you have ranges like this, and the first move out of it is not the real move.
You're absolutely right. That's why for me,
have you ever noticed that?
Yeah, that's why for me the key level is not the triangle. That's why I hadn't even drawn it on my chart, although I can see it as you see, is mostly, you know, roughly this area around 128. Yeah. Because this...
And that was the 08 low too, if you go to your monthlies, I think exactly. 08 or 09.
Look at
right?
this. Look at this. This is a very well-established downtrend. Look at it. We've been moving lower since the summer of 2014. So we're almost 3 years in a downtrend. We've had some rebounds. Obviously, nothing moves in a straight line. Okay, and pound is the currency of a big country. I mean, it's, you know, it's not a country that's, you know, that's participating in a war or that's you know, undergoing some, you know, critical shifts or whatever. It's
like Brexit.
Mate. Yes, okay, it's Brexit. We've already priced this in. We've already had our moves lower. But you know something? Yeah, I think that if you ask me if Brexit is going to end up being softer than what's priced in at the moment for the UK or harder, I would probably tell you softer. I know that the EU is currently playing hard, and for very good reasons, because you don't want to show that anybody can open the door, exit, and everything is going to be fine, obviously, because then this is going to, this is going to become a habit, and then there is no European Union anymore. But at the end, it's at the best interest of both parties, meaning the rest of the European Union and the Eurozone and the UK, to find a common agreement, trade agreements and everything else, so their common future being, in the same area of the world and being trade partners and everything else, to be as smooth as possible. And I believe that, yeah.
I'm a cable bull down at these levels, but we don't know at what extent the Brexit and what the next 2 years that engulf the UK, how businesses and employment and consumer sentiment are going to drive the country, and that, from the fear of maybe a big fallout. Now, I think that the EU is going to play hardball, sure. Do I think that a lot of it's priced in? Yes. But when you talk about, like Dale, like a pop breakout and fake out, which believe me, I think that's a very realistic situation.
I'm 100%
because again, if we break higher, I have to say there's going to be a lot of uncertainties for the next couple of years. Do I think longer term it's going to be better for the UK? Yeah.
Yeah, that's a great point. My view is, I think everyone is discounting everything. That, okay, we had Brexit, we had that initial, collapse of the pound. We've gone through Article 50, and I think most participants are thinking business as usual. And you're right. We have no idea what the repercussions of it are in the coming months and years. I agree with you.
We don't, and that's why I think that we have to, any type of significant rally, in which you're pointing out, Steve, that we're in a significant downtrend. I'll be skeptical of any move above 128. I think that a move above 128 will trigger buy stops, and I think that it could trigger, massive buy stops too, which could take us towards 130, maybe even a little higher. But that, from a trading perspective, I'm not looking for much more than that. Would it be great if the pound rallies to 160 from here over the next year? Sure, that'd be fantastic. But I don't think
no chance.
But I don't think it is either. I think you have to be very realistic with your expectations and
definitely
take a hard look at this.
And Blake, doesn't this whole thing from October look corrective? I don't see anything impulsive in here. It looks like, we worked from that October low where the RSI was probably 20 on Steve's chart. All we've done is it's been more of a time correction than a price correction.
Right.
All we did was work off the oversold condition in time rather than price.
Sure, and Scott brings up a good point. He says capital flows, job losses, it's impossible to say, it's all baked in. Negotiations have not even started yet, and that's the thing, is there's going to be a lot of uncertainties, and I think there's going to be a lot of more capital outflows than you would think. You got a lot of the UK is a big financial hub, and you've got a lot of banks that are going to move out of the UK, and I think that they're going to it's probably going to be more than we had anticipated. So any type of short-term recovery is probably not going to be sustainable in my view. I wouldn't be surprised if we rally past some of that resistance, come back down, retest the lows, and then maybe make a bigger correction higher in 2018 or 19. Who knows? But I hate trying to look out that far. But you're right, Steve. It's a significant downtrend. I'm bullish near term. I'm trying to play the cable to the long side because I think a lot of the crosses look constructive, but that's not. It's no easy feat here. So.
Oh, I totally agree with you. One thing that's guaranteed is volatility. There is no question about it. We'll have sharp rallies on our way to something that's going to be, a final agreement, a final settlement of what's going to happen. We're going to have sharp rallies, and sharp devaluations of the pound. I have no doubt about it. No doubt. And keep in mind, as you said, Dale, by definition, usually triangles are continuation patterns. I think you've said that before yourself as well.
Well, they're good. They're continuations of the pull that they're on. If it came off a rally, you would expect upside. Yeah.
But as we've said, any rally to 128 is possible. Is quite possible. And perhaps, as Blake said, you don't know how things come in the negotiations, but we rally, we take out shorts, and then with the market being free to move lower again, you get some kind of bad news in how the negotiations are going, and you suddenly, wake up and you have like 300 pips per day of cable depreciation. You know how those things work. That's why when you have such an extent political risk playing a role, you have to be very nimble, very nimble. You have to take it, one structure, one formation at a time.
I have a question for Blake. Blake, your presentation of USD MEX yesterday as perhaps a risk-off currency it'll benefit from risk-off. We had pretty good, nothing tremendous, but pretty big reversals in stock indexes yesterday. Is this a lesson in patience? With USD MEX, you did get some type of pop. I think it surrendered some of it, but why don't you tell our community how you're able to stay patient? Because, a lot of people would have said, Dow sold off 280 points and the MEX USD MEX didn't do much. Maybe I'll get out of the way. That correlation isn't working. How do you settle that in your own mind?
I'm glad you asked that. If you look at if you look at the pace here, Steve, I'm going to pass it back over to you here in a second, but I'm just going to show you.
Take over quick.
There's here's the US dollar Mexican peso, and if you go back to yesterday's sell-off, we were about right here, roughly. Okay, we were about right here, and the US dollar Mexican peso didn't respond, and right. And we had such an aggressive sell-off yesterday afternoon. And I was talking with the other guys that I trade with, and I'm like, listen, guys, in Asia, this peso is going to pop. It's going to pop because then you're going to get all these, people that are thinking that it's going to be a continuation lower, and you're going to get this pop in the peso. And a lot of traders that I trade with that don't even typically trade currencies, they picked it up at 1875 yesterday at the close. And they wrote it in Asia, and this is an hourly chart, they wrote it in Asia all the way up into the high 80s. So, it was a 1,000 pip move. But we were capped, and you can tell in Europe that exactly, now I was asleep, but I was more worried that this is exactly what was going to happen. It actually transpired. Because Europe's pretty good at reversing Asia's overnight flows. Really cool. There wasn't going to be any follow through in Europe. And we saw that as we hit, triangle resistance. And now you can see we're just in a consolidation. Now, if you're like me and you look at the S&P and you go, okay, the S&P, in my opinion, is probably setting more up of a flag pattern, a consolidation to the downside, even though we're bouncing right now. Still a lot of hours left in the day. That this 618 will probably hold. That's where we're at right now. We might bounce back up to 1880, 1885. You got to be able to stick with it if you think that the equity markets are in a topping pattern, which I think they are.
You take partial profits on a big 1,000 pip moves like that, because you talk about you love the liquidity when people come in after the fact, and you're trying to get an edge by being there before the public comes in and trend followers come in.
I do. What I try to do, especially on a theme trade like this one in particular, is I'll try to work a core position. So what that means is, let's say my core position is 10, and it doesn't, the accounts that you guys trade versus the accounts that I trade, totally different numbers. So I don't have to, get into specifics. I'll just say, let's say I trade 10, and I want to trade 10 lot position of whatever I'm trading. Okay, that's like the position I eventually want to be in. Right. if I realize this is a consolidative pattern, I'll probably be in like a 5-lot position and I'll work it. So, you know, we get down towards support and I know that we're bouncing off support. I might pick up another 2, but I might sell another 2 or 3 when we get up towards resistance. And then when we get back down to support, I might add another 2. And then, and until we break out and we do what I think it's going to do, that's when I start to really step on the gas and maybe, you know, leverage it up to that 10-lot
So
position.
you're thinking 1930 once we come out of here? Your blue line?
Yeah, I mean, yeah. Well, 1925 is right here. A lot of previous resistance that's held us up.
Okay.
I think that we can come back up and challenge above 1950 or 1915. Excuse me. It really depends on if I'm right about the S&P. Yeah.
Right, the magnitude of the break. How about if we got a 10% break to Stelios's 19,000 Dow target as a possibility?
10% break higher. We probably see new
down in the S&P, call the Dow down to 19,000.
The Dow down to 19,000. Well, if that happened, then we'd probably see 20. We'd probably go back and see previous support. And this is, you know, we were talking about, Steve was talking about funds and you know, you having the benefit of being more active. You know, we're the group that I trade with, the fund that I trade with, is more of, you know, we talk amongst ourselves and we can move positions relatively quickly, and we do talk committee-wise, like themes of the market and what we're thinking. And if you can hear the voices in the background, it's me on with that office all day long. We talk about different themes that we're that are in the market that we're trying to trade around. But when you're an individual trader, or you're trading for a smaller, you know, type of fund like we are, we have the liberty to react quickly.
Yeah.
To an event or a change in tune in the markets. And so when I trade, I think about that from a, you know, longer term perspective, because I always want to be the guy that's selling it to somebody else. So if I think there's a game-changing event that will move the markets a certain way, I try to position myself accordingly, knowing that when you take like an institutional type of, you know, whether it's like Fidelity, you know, and you know, high growth income fund or whatever, they're trying to reposition in the market. It usually takes them a couple of days to a week or two to really get repositioned in the market. So when there's like a game-changing event, like let's say we break into new lows in the S&P and it really starts kicking off more of a downtrend, then I know that the market needs to reposition themselves into shorter emerging market currencies and, you know, longer the dollar in this case. But it might take them, you know, a couple of weeks to do so. For example, when, you know, Donald Trump's Rex Tillerson, I'm trying to think of his title, when he went to Mexico and he was Secretary of State, when he was really very weak in his response to Mexico, we knew at that point in time that funds had to reposition themselves in the peso because they were so aggressively short. That all happened right here. And we knew that we were on the right side, being short from up here and taking a lot of profits through here. We knew that we needed to get aggressive down through here because it was a change in tone from, you know, the White House administration in how they would respond to Mexico. Knowing that the market was extremely short pesos, this was a couple-week process of funds repositioning themselves out of, you know, major short Mexican peso positions. You know, and then when you go back to, you know, the White House is now starting to relook at NAFTA and certain agreements, that might be the catalyst that actually drives this, is starting to stabilize the peso now. And again, all I need now is just a little bit of risk aversion to be a little bit more aggressive in my short peso positioning. So again, we try to get ahead of the curve, ahead of, you know, what we think institutional type of investors are going to be doing. And you know, you can do the same thing too. I know as traders, it's very tempting to take little bits and pieces of profits here and there, especially when you're living off the markets. It's just, you know, it's what we do. It's like, you know, it's, you know, you make 50 or 100 pips and you're like, man, that was a good day, that was a good trade, and you have that flexibility of being nimble. We do as well, but we try to look for the actual turns in the market and try to position ourselves accordingly, and without getting too, you know, aggressive, like, you know, like knowing that I'm in this triangle. Whoops, I didn't draw that correctly. So like, no, and by the way, Dale, you have these drawing tools too, in case you didn't know.
Okay.
Being in this little triangle here, I'm positioned for a reversal, but if I'm wrong and I get stopped out, my position size is manageable enough to where it's not going to hurt me. But I know that if there's a change in theme here, then I can get pretty aggressive. And speaking of which, I know we probably want to take a break. I'm gonna let you take a break, Dale, here in about 5 minutes before.
Speaking of triangles, because a friend asked some time ago, do you want to go over briefly the euro yen?
I was just gonna get over to the dollar yen, and I saw there was a question on the euro yen.
Okay.
I was shorting the dollar yen. Matter of fact, myself and a few other traders in a chat room that we have was shorting the dollar yen up at near triangle resistance around 111. So taking advantage of this, again, it's the theme of the S&P, you know, might be more of a continuation type of pattern. We were selling some dollar yen this morning at 110.90, you know, and trying to take advantage of that. But these are really tight ranges that you see all across the market in anticipation for tomorrow. I mean, we got the euro dollar between 107, 106.30. You got the cable that's in a triangle formation.
A lot of indecision patterns is what you're saying, going into an inflection number. You think we can get a surprise? What's the market looking for tomorrow?
170, 180. I think that, and with you know, the ADP number, you know, here's the thing, the ADP number was strong. That's private jobs. You know, with the Trump administration making a lot of government cuts, the BLS number might not be as rosy as the ADP. Think about that for a minute and think about that moving forward. So I wouldn't be surprised if we had a downside surprise tomorrow, even though some of the, you know, we saw the employment component of like the ISMs that came in a little weaker, but, you know, I wouldn't be surprised if we come in close to 150. Frankly, but anyway, but there's a lot of indecision here, a lot of, you know, triangle patterns on things that I'm looking at, which means that this is not the time to be overly aggressive. This is the time where you probably want to, you know, as you're in these apexes, you want to pare back your position size ahead of tomorrow, especially if you're looking to hold positions through non-farm payroll. One last thing, I'll just cover the euro yen.
Don't be a hero, right, Blake? Prudence over valor.
Yeah, exactly.
Markets will be here after the NFP number. Make sure your equity is.
Correct. That's a good warning. So the euro yen, we've broken lower through what I consider some very technical. This is the dotted line that you can see here. You know, that roughly is between, you know, 118, 119, and frankly, as long as we stay below 119, I think the threat of further downside is still there in the euro yen. You know, and obviously this is going to be moving a lot with risk appetite or risk aversion. I'm not a proponent for selling down here. I'd be more of a proponent of selling rallies. That would be my take, is, you know, if you can get a rally up to, whoops, didn't grab my drawing tool there. If you get a rally up towards like this, you know, 119, something like this, you know, like I'd be more of a seller in this, you know, this type of situation versus, you know, any other type of situation. But that's not saying that that's going to happen. And, you know, I look at a lot of things and I imagine what I want to happen. But, you know, well, that only happens maybe 30% of the time, and more times than not, the market doesn't move the way that I thought, and then I just end up missing a trade or, you know, letting that one go by. But, you know, like I look at the euro yen, there's nothing for me to really do right now. I'd rather be more short. I'd rather be short rather than long, as we're below this dotted line, but that doesn't mean I'm going to run out and short something. You know, a lot of people confuse the ideas of, you know, a bias versus I need to trade right now. Like yeah, exactly. I look at the euro yen. It's like, yeah, I'd rather be short looking at that. I wouldn't be long. Then somebody will ask me, well, why don't you short it now? And it's like, because it's not fitting my criteria of what I need to see before I enter a trade. So and I think there's a lot of confusion between, yeah, exactly what you said, bias versus.
People need to write this down, Blake. Sometimes the right trade is no trade.
No, it's absolutely right. I mean, there's no reason that you have to trade at any given time a specific position. I think there's reasons to stay. You keep something on the radar. You start looking, whether it's, you want to be long or short, but then you find your levels, you find your prices where you want to be in a position. Anyway, Dale, hey, it's been a great conversation with you and with Steve. I know you have an interview coming up. I don't want to take away from that at all. So you guys have a great trading session. Thanks for having me on today. And thanks everybody for being here and listening in. I appreciate all of your feedback and comments that have come in.
Thank you very much, Blake.
Okay. All right. Thank you, Blake. I'm going to bring on F.A.C.E. Graciela in a minute. I'm going to take a break, but before I do that, let me show my screen. Want to pass it back over to me? I'm not used to me being...
as an organizer, you can take it on your own. You don't need somebody to pass it to you, Dale.
Okay. Well, I'm looking through my screen, but I will. Let's see. Yeah, that's right. I could take it on my own.
On the right-hand side, I think there is a change presenter. Yeah, good.
Okay. So before I do this, though, I just want to show a look that we got from, I have to scroll back a little bit. It's a pitchfork look by someone in the community. Was it Jonas? Are you still around, Jonas? Jonas said this could go either way tomorrow. Okay, there's a pitchfork on the pound and possible pathways. I just wanted to acknowledge that I saw it. Thank you, Jonas, for your contribution. Interesting, showing the triangle within the triangle. I favor this as a possibility for a buy. Before we go higher, we'll see what happens. And I also want to just I need to take a quick break before we interview Graciela Fonseca. And then we'll get this interview underway. And you guys are going to love this interview. I've interviewed F.A.C.E. a few times. Watch for her demeanor and watch for her calm style of presenting. And I've seen her be right 1 million times. So I'm just going to play this and take a quick break. And if we run over a little bit, that's fine. Okay, Graciela, I've made you the presenter. How are you?
Good, good. How are you today?
Oh, it's so great to hear your voice again, Graciela. Thank you so much for joining us.
Yes. Same here. Nice to be here.
So I just want to make a few comments about you. Graciela has one of the calmer demeanors of anyone I've interviewed. Her work is excellent. Why don't we open it up? You could follow her on Twitter at F.A.C.E. She lives in Costa Rica, so that's the Tica part of it, right, Graciela?
Right, correctly. Everything is small.
Okay, so here's the key question. I know that you succeed in the markets. You're not always right, but you have a pretty good hit rate. How long did it take you before you felt that you were a proficient and more consistent trader? Period of months, period of years before you really had the epiphany and felt like the pro that I call you?
It took a couple of years. I started studying in 2006, and I started like everybody with a lot of indicators and wasn't sure what I was doing. So it took me about a couple of years to decide how I wanted to trade, how to make my decisions, and from then on, yeah, and since 2010, I became independent. I lived from my own trading.
Okay, so then you've really gone through an evolutionary process. You know, I tell people, why should they expect to be proficient 6 months into it? I mean, if you're a carpenter, you start off as an apprentice, and then you're a journeyman, and then you're a master. Why shouldn't it take at least a few years of training and experience? Because you can't learn experience. You have to live through what you lived through for the first 2 years to learn from your mistakes and recognize what works. So, you know, people have to be patient with themselves. That's my advice, not to try and make it happen overnight. And you agree with that?
Yes, totally. And I feel that that is the problem with all the marketing hype that goes around the financial markets, and especially Forex, where they sell that you're going to make a lot of money with a $500 account, and that's just not true, but people want to believe it, and that's the way that they enter the market, and of course they're going to crash, they're going to lose all the money that they have, because there are a lot of pros out here and they're making money. So yes, I think that it's just like going to college, just like learning any profession. You have to go study and then practice.
You gave me a flashback to when I was in front of the membership committee at the Chicago Mercantile Exchange, when I got a divisional seat index options market to trade S&Ps, options, lumber, etc. And they were interviewing me, and you know, I felt like a fresh piece of meat the way they were looking at me. You know, because it's the new guys. Now it's not floor traders that pick your pockets. It's the black boxes and algos if you're not experienced. So we're looking at Aussie CAD here.
Yes, I have a couple of charts that I'm following up or stalking that they might be setting up soon. So I want to share them and see what you guys think.
I rarely trade this pair, but tell me about the characteristics of this pair and what attracts you to Aussie CAD.
Okay, what I do, I track 25 instruments because I trade on the higher time frames. I look at monthly, weekly, and daily, and then narrow my entries on the 4-hour charts.
That's right. I forgot. You use a telescope.
Right. So for me to have enough entries during the month, I need to look at different instruments. So I have a bag of 25 instruments, and they all behave a little bit different. So what I do, I follow them up, and when they're ready, I go. So here's a few that I'm following up, and my analysis is very basic. I just basically use a multiple time frame. I look at candles, support resistance, supply and demand areas. I use Fibonacci levels, the monthly averages, mostly at support and resistance also. So here what I'm looking at.
Are all those lines on your chart different moving averages? The green, the blue, the red.
Right. Okay. This is 21, 55. 100 and 200 simple and exponential.
Okay, great.
So they're going to be used as support and resistance mostly. Okay. That's how I use them.
Okay.
So I'm looking at 3 Australian crosses. This is the first one, which very simply we can see the patterns, and the higher time frame is stronger. So last month we closed up here hitting this top line again of the triangle again. So I'm thinking this could go down again. So I start drilling down. So I see this possible head and shoulders on the daily chart, and I'm watching it on the 4-hour chart to see if it's able to break. It's been hitting this level for 4 days now. So hopefully it'll will give in and it'll be able to move down. And
key point, Graciela. When Graciela drills down, she drills down to a daily. When most scalpers or swing traders drill down, they're drilling down to a 15-minute, a 5-minute. So for someone that uses a telescope, a daily is a drill down. So that's a lesson that, you know, I'm not being too micro, that you don't have to know about what's happening on a 5 or 15-minute chart to be successful, because I've seen Graciela successful on her calls. So the smallest time frame you go to is a 4-hour.
A 4-hour, yes.
Okay.
Yes. I live in a beautiful country, so that I like to be outside too. I don't want to be in my computer all day. So 4-hour I find is very stable. It's not so much noise from the news. The stop losses areas, they don't get hit as much, so I like it. So if this is able to break, I'll be taking a bounce on a Fibonacci level. And since this is coming from a monthly pivot, I will let it run all the way to the other side of the pattern. That would be around this area of 0.96. So that's a lot of hits. So that's what I try to do. And as the price goes down, then I'll be moving the stop losses and adding new positions. Another one that I'm looking at is...
You take partial profits, or you ride the whole thing and the only thing that takes you out is your trailing stop?
I do take partial profits, yes.
Okay.
Yeah.
Okay.
This is another one on the Australian process, and it's basically the same idea. It's been hitting resistance here for several months, so I'm thinking that since it's in a short trend, that it can go down again, but it needs to really break this level, the 75 level, which is support over here. It's a trend line, there's the moving averages, there's a pivot in here too, plus there's the 0-0. So for me to consider it, it really needs to break that level, and the same, I'll be selling on a test of the broken trend line, and I'll ride it all the way down to the 72 area.
Okay, that looks like that would be like, I'm just ballparking, about 78.6 back from the rally from 71.60 to 77. So basically you have a bearish view with what you're seeing in Aussie and Aussie CAD.
Right.
Okay.
Bearish.
Got it.
And then I also have the Aussie New Zealand.
Oh, that's something that, okay, interesting. Because long term I'm bullish, but I saw that failing rally up there last week. You're looking for a potential breakdown under 107.90-ish?
Right, right. And here is, for example, how I use the moving averages for bounces as resistance, resistance, resistance. And here,
look at that.
The last 3 weeks, it's been using it as a resistance also. So I'm thinking it's going to do the same as it did before.
What moving average is it? Is that the 200 up there, that brown line?
Yes, that's the 200 exponential. Okay. So I see the market as human because we're behind it, and we humans, it's easier for us to do what we are used to doing, what we have done before, than to change. So if it has hit this level and fall, hit this level and fall, it's probably going to do that again. That's my way of thinking. So
you know, that is really, that's a pearl. That really is a pearl. So the markets are like human beings. It takes a lot for us to change, right? Yeah, normally it takes a crisis for human beings to change. So what you're saying is markets don't change unless there's something dramatic that happens, and it's going to continue in the same direction. Really an interesting metaphor, Graciela.
Thank you. So here I'm also looking at this possible head and shoulders pattern, which I also need to break the 0.800, 0.750 area for it to really start moving. And this is the kind of setup that I like if they come from the monthly or from the weekly, because they have small stop loss, and they have a big potential to rally down all the way down to 102. 60, 103 area, so that's about 500 feet if it's able to break down here.
Okay. Do you see anything at, say, like 630 that you'll be eyeballing where you have a confluence on your daily of a lot of moving averages coming in there?
Right.
And kind of a breakout area for the pair?
Right, because yes, we have all this support over here. So this is probably going to give it a pullback. If we're able to break over here, this is going to be the first take profit. And here a lot of people which are working this way are going to take profit, and the price is going to go back, hopefully to this area again, and here we can sell again.
Okay.
We might touch this level 2, 3, 4 times, I don't know, and hopefully you'll be able to break and then continue on down. But yes, because we had a wedge over here before, which we broke to the outside, and it wants to come down and test it. So it'll like in steps.
So just like the markets are like humans that go in the direction they're going, the markets also have a memory, and the markets will come back. If you look left on a chart, that's the market's memory. Looking right is the future, looking left is the memory of the market.
Right.
Memories. Remember that song? Memories. Like, right. So, you know, I'm hardly singing in here now. So anyway, what else you have for F.A.C.E?
I have a pound New Zealand.
Okay. Pound Kiwi.
Which I'm trying to break this channel to the downside. It's really in a horizontal range over here in the monthly.
Yeah.
And it hit over here before, fell, hit over here. So I'm trying to see if it's able to come down again to the 168 area. That's about 1,000 pips. So that's interesting to me. But I have to see it break this trend line and start moving down to that side. But again, the moving average, the longer term moving average, has been stopping it for the last week, and doesn't let it move up again. So it's just a matter of them picking up volume and then moving short.
The other scenario is on the weekly, since you don't have anything yet, that it could work towards that trend line and your blue moving average first, right?
That would be even better. This would be an even much better place to sell it.
At 83-ish, it looks like, right?
Yeah.
Okay.
183.
Great looks. Excellent looks.
Thank you. Then I have pound Australia, the Australian again.
Yeah, it looks weaker than the pound Kiwi.
Yeah. Which I'm just looking to see if this moving average gave it resistance previously. So I'm thinking last week it stopped it. So I'm trying to see if it pushes it down. The trend line is all the way up there. So usually, but there's another one over here. So usually I like it to look at the external trend line. But the market's going to do what it's going to do, not what I want it to do. So I'm looking at this level over here. This was a head and shoulders before, so it can be just testing the neckline again over here, and then be able to move down again. If it's able to move down, this one doesn't have like a lot of room to the support. The support is around 160, but it's still from the weekly, it's still good pips. So it'd be worth it to monitor.
Okay, so that would be approximately your target.
Right.
Longer term. And you don't have a trigger until it breaks the green uptrend line?
Yes, and it needs to break on the daily, yeah.
Okay.
My first trigger comes from the daily chart.
Okay. Great looks, Graciela.
Thank you. And then I have CAD yen, which, let me see, here are some trades I took yesterday, and I'm bullish now. But this is a retracement.
Yeah.
Yes, this is a retracement. I took it here yesterday. I made a big pullback with the S&P movement yesterday, but it just barely made my stop losses, which are down here below the previous day low, and they're profitable again. But I'm bullish, and I'm seeing this as a retracement to then sell again.
We're
So
up around 84 and a half or so, or 85 and a half.
Which one?
I think it looked like 84 and a half on the Aussie yen that you were showing. You're looking for a rally. It was the previous chart.
Yeah.
And it was on the
Aussie yen, what I'm looking at is this trend line on the weekly. So I'm trying to see if it bounces over here to the upside. So I bought it down here. I bought it yesterday, and I'm trying for it to go up to around 85, which is the neckline of the head and shoulders over here. And then I'm going to, if it gets up there, it says retracement. Retracements are usually riskier, because it's going against the major trend. And
I had the line in the sand. I had the line in the sand around 85.80 for the breakdown. So you have a little different channel, but we shouldn't close back over 86 or something else is going on, right?
Right, exactly. Right. Retracement is very normal. Around the 85 to 86, which is where all the these moving averages is, and the neckline of the head and shoulders. But it could go up there. I still believe that it can go up there. So I pretty much have the same view on the yen crosses, that they might be making a retrace and then resume the downtrend. So on the CAD yen, this is the only one that I have not bought yet, and I'm looking at a possible bounce to test the 84 area.
Yeah.
And then for it to sell again. So it's still respecting this flag or channel going down.
Okay, it's definitely in a downtrend. That down channel you have is your. I know it's only a forecast, but you think that we could accelerate through the bottom line on the next break, and then you'll have a different pattern if we take out the return line of the downtrend. You know what I'm saying?
Yeah, these usually break the upside. So here, all this week we are touching it, and this could be an inverted head and shoulders for a move up. Okay. But since all these weeks have been going down, I'm still thinking, and also the monthly is still lower high, so this is still going down. So that's why I'm thinking that it could sometime break to the downside. Which they do sometimes. Most of the time break to the upside, but sometimes they break to the downside. So we have to be patient. Yeah.
What's the temperature on the beach today?
It's about 82, something like that today.
And what's the water temperature?
Oh, it's 70. Yeah. Very nice.
Okay. I'm going to jump into my transporter.
Our water. Yes, come visit. Anytime.
So Graciela is living the dream, but it took a lot of hard work. It took 2 years. She's macro. For her to drill down as a 4-hour chart, only after she sees something on the daily, you may want to take it to heart. If you notice, Blake also uses a telescope. The better traders that I've interviewed, and I've interviewed 700, they know how to have a macro view and a bias, like Blake says, having a bias, and then use their shorter term work to establish trades that fit with that bias, just like Graciela is doing and has demonstrated today. So you have a view here in Euro?
Yes, this is the last chart that I have, and I am working on these trend lines over here. It has been using them as support. Yeah. So we have to see tomorrow with NFP.
The NFP,
to see if it's able to move up.
Right.
Ah,
So your
perfect.
buy is,
But
so your breakdown is under the second trend line, and
Right.
and
Mhm.
getting above, say, the 23.6 and that green moving average would be a kind of a positive sign for you initially.
Right, right. And we have to remember that we are on a range. We're not trending on the euro. So anything, if we can buy at the bottom and let it run all the way to the top, or when we get to the top, let it run all the way.
Yeah, we've pretty much been in a range for a year and a half now.
Yeah.
Yeah.
People forget that.
So they're putting people to sleep, and then one day it'll wake up and people won't know what to do.
Yeah.
So great presentation again. Thanks for
Thank
accepting
you.
the invitation, Graciela.
Thank you. Thank you. Let me
And
see how.
good hunting, and you're welcome in F.A.C.E anytime. I know the hours aren't as great for you because it's late for you, but you're welcome to join our community and at any time, and appreciate that you came here as a guest today.
No, thank you very much for inviting me anytime. I really enjoy talking to you.
Yeah, and thanks for edifying the whole community with some great views on Aussie crosses and yen crosses and the euro. I appreciate it, and we'll do this again down the road.
Sure. Thank you. And this is a great community that you're building. Congratulations.
Thank you very much. Everyone thank Tika, and you can follow her at FX Tika. I remember last time you talked to me that you gave up training people. It was just a little bit too much of a headache. Are you doing anything besides trading your own account right now?
I'm doing a coaching in May in Spanish for Latin America, but it's going to be a small group, just 10 people. Yeah, I don't want to get overwhelmed, but I still like to help. Yeah.
Okay, so if you're a Spanish speaker, you could get in touch with Graciela, and maybe she'll make room for one more. So thanks once again, Graciela. Good hunting on the NFP, and again, look forward to talking to you down the road.
Thank you.
All right. Graciela Fonseca at FX Tika. A lot of rhymes. Living in Costa Rica. Thank you, Graciela. All right, everybody. You know, we only have a little bit of time left. Any questions or comments? I hope everyone enjoyed Graciela. If you notice, her demeanor is pretty calm, isn't it? She's very non-emotional, and she's a very macro, and I've seen her, thank you, Patrick, and I've seen her be right quite a bit. I hope she drops in now and then and shares her work with us. And with that, I want to thank everyone in the community for the great shares. Thank you for showing your work. I want to thank Blake for his input and Steve for his input today, and Graciela for taking time out of her day. And we'll see. We are going to be opening early for the NFP 5 minutes before the number tomorrow. So that's 8:25 Eastern time. So I'll see everyone for the fireworks tomorrow. Remember, don't just count your pips, count your blessings. My cure for any kind of depression is find one thing to be grateful for, and you can never be depressed. And thank you very much. See everyone tomorrow. Thank you, Steve. Thank you, Blake. Good hunting until tomorrow morning. My view is don't predict the NFP. That's a binary bet. That's red or black. That's roulette. But we'll see if we could find some opportunities to react to the reaction. You're welcome, Alex, Bill, Tim, Kevin. Thank you very much. Big shot, Oscar, Stephen, Patrick. See everyone tomorrow. Get some rest and have your battle dress on for tomorrow. Adios.